This is Eric Mother, mother.com, January 26th, 2021. And we see pretty much the NASDAQ as close to all-time highs, which it recorded yesterday. But I want to talk about the biotech ETF, LABU. Now, the reason for this is not usually, but I do get a lot of questions about exit. How do I exit? Now, of course, this is a so not 14 on the RSI setting, but I rather my own setting, which is 26. And the reason for this, if you want to know, is because 26, it takes out a lot of the noise. So 4 hourly RSI setting of 26. We see that the RSI is making a declining line of resistance, or another way of saying this is negative divergence on the 4 hourly. So if you are looking for any excuse to get out after a nice run, there it is. I can end the video right there. It's there. You have visual reason to take profits, to get out of a position based on this simple divergence. Now, there's also an understanding that we need to appreciate that if the market can and could the market decide to take out that line to the upside, actually what ends up happening is you get a sharp increase in prices to the upside. So it is valid as long as it is showing resistance. And again, if you're looking for an exit sign, well, there it is. End of story. But it's an educational video, so let's add some more color to this. If you take a look at the daily, we can see the daily also reflecting the same look and feel, where we see improvement to all-time daily closing highs as of yesterday. And we can see the RSI is showing this declining line of resistance, aka formation of negative divergence. And as such is the case, this is also another visual reason to take profits, ask questions later. Now, I should mention, I've been mentioning this on many videos. Don't expect a major market sell-off until we break this RSI lows line on the daily. So the daily has to break this before we can see a material plunge in markets. And remember, the 50-day is going to be of consideration as support even during a pullback. So really, we can never really be for sure whether it's a major generational high. What I mean by that is we don't know that it's a high that's going to last for many years or many months until later. In other words, it's when we get to the 50-day moving average at some point that the question is going to be asked, are we going to find support at the 50 or are we going to break below it? At some point also, we're going to have to test the 200-day moving average. And at that point also, we don't know how the market's going to respond, but support around the 200-day is positive. A break below the 200-day, of course, would be a bearish signal. So we don't know that for now because it's not in the charts. So it's very hard using charts to proclaim that the market's coming here when we don't know what's happening along the way. So we can only take information bit by bit, moment by moment. And in this particular moment, in my opinion, if you're looking for any exit signal, this is a good sign right here, this negative divergence. Now, with the understanding that as of the monthly chart, the monthly just did move above 69.1 this month of January. So don't expect a major sell-off until the RSI is back below 69.1 on the monthly. Should the RSI continue holding above 69.1, this is actually a sign of a stable to very bullish market. So keep that in mind. And also on the weekly. On the weekly, the RSI this week continues to hold above 69.1. So we should not expect this market to be selling off the biotech market until the RSI on the weekly is back below 69.1. It would also mean from a price perspective, this recent breakout would have to fail before we can see this really putting a little bit of a scare on those who are holding this instrument or biotech stock. So in other words, a failed price breakout is also needed to confirm that the market is poised for a substantial movement to the downside. And just like I mentioned on the daily, there's a line here connecting RSI lows on the weekly. This line would have to break. And that break in itself would be needed information as to the potential for a stronger push to the downside. In a sense, it would be similar to this break here in early 2020. It was that break of a RSI trend line right here that led to the drop of February, early March 2020. So again, just to kind of sum up what I'm saying here from an educational standpoint, if you're looking for a reason to get out of an instrument, here's one. There's divergence on the daily as prices have been creeping higher. And on the 4-hourly, we see confirmation of this type of divergence. Keep in mind, the RSI is stalling. On the 4-hourly, the RSI is finding it a little bit difficult to move above RSI 61.8. As I've mentioned in many videos, this is the strongest type of correct negative divergence. This is based on my own research and lots of more information in the description of the video if you're looking to expand your understanding of this. Lots of original methods. For example, we can see uniformity, and I won't go into uniformity. Links are going to be in the description, but there's also uniformity here. This was a break. These types of move tend to be a warning, a precursor, a preview of what is to come next. Because if you take a look at what has happened since that break of the RSI, and this is the beauty of this method, you can see that the RSI has turned into a rejection wall every time it's tried to move higher. So you add all this together, if you're looking for an exit sign, there you have it, with the understanding that we don't know what happens down the road until markets give us more information moment to moment. Eric Muathe with Muathe.com. Love, light, light, love. Namaste.